G'day, welcome to another edition of Stock Talk. My name is Aman. I'm an investment coach here at Sage Investors, and today I want to talk a little bit about sort of currencies. Basically because I think right now when we're looking at where stock prices are going and where I'm looking at where stock prices are going, it's for the last while it's all been about interest rates, the direction of interest rates and whether interest rates are going to start going up, and that's been a big driver of, I think, of stock prices the last 4 or 5 years. But right now, I think right now we're in a zone where it's really a lot more about where currencies are going, specifically the US dollar. So I'm trying to like rationalize and trying to formulate my own investment decisions. One of the things I am focusing on is the US dollar. So just want to a little bit talk about sort of, I guess, the thought process I'm trying to rationalize through it, and to really get at where we are, where we're going, where I think we might be going potentially, or make an educated guess. It's a little bit important to know a little bit about where we've come from. So kind of set the table a little bit. So if you go back like about 4 years ago, the US dollar was essentially like free falling. It was just going lower and lower, and there was a lot of issues causing it to go lower and lower. One of them was the budget situation in the US. If you remember that whole debt ceiling debacle, where literally the government, US Congress, was really ready to just go bankrupt. And that had a big impact on the credit rating of the U.S. Went from a AAA, got downgraded, and had an impact on currencies. Other factor also is just simply lower interest rates. We've been in a low zero, near zero interest rate policy for the last 4 years, 5-6 years. So that's had an impact to drive interest rates lower. And then you've had the whole government central bank, Federal Reserve quantitative easing aspect, where they've just been going out and buying bonds, and that's kept interest rates low. So all this lower pressure on interest rates has really had a factor in terms of the dollar lowering. And so, but the impact of that really has been a lower dollar makes exports and goods cheaper and allows U.S. companies to be a lot more competitive globally. And that's what's happened with a lot of this low interest rate policy, is that we've seen companies starting to improve a little bit, seeing some recovery in their earnings and profitability, and that kind of stimulated a lot of stock from a perspective of stimulating stock prices. One factor we also saw was the big revolution really in the US with respect to oil, and the fact that the US could now produce oil thanks to fracking technology, thanks to getting a lot of extracting oil out of shale deposits, and the technology was there for it to not just produce a little bit, but enough that it could actually become an exporter of oil instead of becoming a net importer of oil. That has a factor in driving oil prices and contributing to the higher oil prices at the time. So, and that also allowed the U.S. to improve their fiscal situation. So the budget deficit started going down and lower because you're getting more income coming in from producing oil and commodities, and improved exports. So what's happened is now in the last couple of years we've seen kind of a reverse. We've seen now the U.S. dollar now tracking up, and now we're at a point now where as U.S. dollar has been getting stronger and stronger, commodity prices have been falling down, because there's usually that inverse relationship between the U.S. dollar and commodity prices. So last while we've seen commodity prices U.S. dollar go up, and oil prices, metals, materials have all fallen down. But the impact also of the rising dollar is it makes goods, U.S. exports more expensive globally, and ultimately that has a negative impact on companies' profitability. So what we're seeing now is that kind of impact of that rising dollar starting to creep into a lot of the earnings of companies now, and the earnings so far have been very good, and it's had an impact. And now all of a sudden the market now is just starting to wake up to this reality, is saying, you know what, these companies just aren't as profitable, and what are we paying for these stocks? We're paying, what kind of multiples are we paying for these stocks? So now I think we're starting to see that beginning of the unwinding of kind of bringing a normalization really with respect to asset prices. We've also seen now the fact that the Federal Reserve has initiated at least a trend toward increasing interest rates rather than decreasing interest rates. So that has an impact of increasing the US dollar ultimately, and ultimately could have a bigger drag in terms of future company earnings. So That's the wild card right now, and I think that's the wild card the market's digesting, and it's creating a lot of angst. Is the U.S. dollar has just been rising, and it's really creating a lot of headwinds and a drag in terms of the economy, and the economy is just puttering along. So, and people are getting worried a little bit because if the Fed continues to increase interest rates, that is going to put even a more upward pressure on the U.S. dollar, and which could ultimately again lead to down the road a depression of stock prices. So that's the factor right now. So the question is whether the U.S. dollar if it's going to continue to go up, then there is going to be pressure on, I would think, stock. I'm trying to rationalize, just say rationally there should be pressure on stock prices. But the wild factor is if the Federal Reserve decides to, kind of hold off on their program of increasing interest rates. The big buzzword that came out of that December meeting was the gradual increase of interest rates. If they were just going to increase rates every meeting 25 basis points, that's probably going to put a firm pressure or cause the U.S. dollar to increase. But right now, there's a lot of talk and a lot of debate whether the Federal Reserve is just going to hold off and back off because maybe things aren't as good as they thought they would be when they started their interest rate policy, tightening policies. So that's the wild card right now, I think, is the U.S. dollar, and I'm kind of watching the trend in terms of where that's going because that's ultimately seems like it's going to determine the competitiveness of U.S. companies and ultimately lead to determine the profitability of those companies. So something to keep an eye on. I know I am, and because it seems to be coming into play a lot more right now. So that's all I got for you today, and if you have any questions about certain investing concepts, topics, decisions that you're facing, and you just want to, looking for a shout out type thing, give me a shout. More than happy to speak out to it. You can reach out to me at Twitter. I tweet on all things about stocks on a daily basis in real time. So you can reach me at my handle is @Sage Investors, and you can also hit me at my website. Hit me an email at my website or check out my website, www.sageinvestors.ca. So that's been another edition of Stock Talk. My name is Aman of Sage Investors, and we'll catch you again.